Welcome back to Market on Close. I'm Sam Vardas. Today's consumer confidence report coming in above estimates at 97.4 as the data continues to show a resilient US consumer. Joining us now to discuss the data is Erik Hirsch, who is co-CEO of Hamilton Lane. Thanks so much for joining us on the Schwab Network today, Erik. I just want your thoughts on the data because it seems that while things came in a little bit better than expected, consumers are feeling less confident than they were a month ago.
I think we're seeing a real bifurcation. So the top end of the consumer continues to spend aggressively and confidently. It's the bottom end of the consumer that continues to be under the most pressure related to inflating prices, largely caused by the tariff impact. The other data point that we're seeing that's really starting to be concerning is how difficult it is to get jobs for our more recent college graduates. That younger consumer is really struggling in today's job market, and I think that has some potential for some real ripple effects.
Yeah, the bifurcation that you speak of, that was certainly something that McDonald's had actually highlighted when we heard from them a couple of weeks ago in their earnings report. And we've certainly seen it in the numbers. I mean, if you look across the board as far as what the airlines were telling us, what some of the casual dining was telling us, and the fast food retailers, as well as, some of the more sort of luxury brands. So the data certainly seems to be consistent. So what areas do you think are most concerning as far as, particularly in light of what the Fed was saying? Because look at this consumer confidence report out from the conference board. And to your point, I mean, they're worried about jobs, but they're actually also worried about inflation as well.
Well, I think that's why this has been so difficult for the Fed, because in a rising rate environment, the higher end consumer is benefiting from that. They're not as burdened with mortgages and debt, and they're benefiting from more interest rates coming out of their savings account and higher yields on bonds. And so they're actually making more money and they're spending. So when you look at then the higher end consumer companies, restaurants are full at the high end. Expensive cruise lines are very busy. Airlines, people continuing to travel. High-end resorts, very expensive, fully booked. But then, to your point, Sam, the McDonald's data point of we've got to get that value meal even lower for that lower-end consumer and for that younger consumer. You look at that data between 18-year-olds and 26-year-olds and look at what's happening in terms of their lack of ability to find good employment. Part of that is what's happening in the economy, and part of that is this is where we believe we're seeing the first real impacts from what's happening on the AI front.
Yeah, so I'm just wondering, how much of a conundrum this is, for the likes of Powell & Co., particularly off the back of what we heard from him on Friday. I'm just wondering what your assessment is because, to your point and what we've seen in the data and from some of the companies, the corporates, is that, consumers are still spending. Yes, there is this sort of divergence as far as dispersion across who you are and what you're spending on. But, costs are rising. We heard the Walmarts talking about that's coming in sort of week by week, and then you have the potential for this rising employment as well. So unemployment, excuse me. So, I'm just wondering, what you make of that in light of what Powell had to say and the expectations that are now priced into the market for this potential for a September rate cut.
Well, I think these are two separate issues. I think we have a Fed issue in terms of what's going to happen from a monetary policy standpoint. What are they going to do with rates and trying to balance that unemployment with what's happening with inflation and consumer spending. So I think that's what the Fed is tackling, and you can see them kind of leaning in, leaning out, a little bit hedging. But the other piece I go back to is this is a U.S. economic and societal issue. If we're going to see a huge rise in unemployment or lack of jobs for recent college graduates, that has a huge ripple effect for decades to come because they've now taken on presumably a lot of college debt. They've gotten themselves a college education. They're heading out into the market expecting a traditional kind of white-collar job. And now what we're seeing is they're just not finding it. So they are our consumers of the future. If we don't get them gainfully employed and earning an income, then you're going to start losing some generations as we sort of move into the future for future spenders. So I think there's a today issue, but I think there's also a tomorrow issue.
Yeah, absolutely. It's an important trend to certainly keep tabs on, particularly because, the threat of AI is making things a bit challenging as well. I mean, not so much the threat, maybe that's too much of a harsh word, but the impact that that's having, it's very much changing the landscape as far as some of those job opportunities. But I'm just wondering what you make of the narrative about, some talking about the potential for a reacceleration of growth. And I was having some really fascinating chats yesterday about also some of the incentives that Trump has managed to get as far as FDI inflows. I mean, if these sorts of ideas about, reshoring, onshoring, reindustrialization and, manufacture everything here is going to sort of open the door to things as well as far as the job market.
I agree. I think they're just different kinds of jobs, but I absolutely agree with you. I mean, we're seeing it in our own private markets portfolios, which is this desire to fix your supply chain to make it more local means a lot of onshoring. You add to that all of the power consumption requirements that are resulting from new industrial builds combined with the data centers. That's a whole nother level of construction and infrastructure that's now required. So all of that, I think, is net positive for the economy. Again, they're different kinds of jobs. These are manufacturing jobs, hourly wage jobs, a lot of them not impacted by AI. And so that, to me, is a positive. However, if that's coming at sort of the cost of higher paid, salaried career positions, net, that's not a great trade-off in terms of total consumer spending.
Yes. OK. So as far as what we've seen in the data and as far as what you're saying, as far as, some of the trends with regards to the economy, I'm just wondering where the investment opportunities are, how one should be sort of approaching the markets with all of this in mind.
Well, I see a couple of things. So one, on the builders and the power suppliers, we know that there's opportunity there. That's going to continue to rise. We're also seeing a big uptick right now in some announced M&A transactions. The big are getting bigger. So a lot of the very large publicly traded businesses are beginning to be more aggressive acquirers. That, I think, also provides opportunity if you're identifying both the acquirer or the acquiree. I think we're certainly seeing aspects there. On the private side, we see a lot of opportunities for infrastructure. There is just a tremendous need, again, partly onshoring and reshoring, partly power, but there is a huge power and infrastructure demand that we're seeing. Most of that on the new side is getting funded by private markets, private infrastructure, private equity. And so we're seeing a lot of capital flowing there as well.
Okay. Just very quickly, sort of any particular sectors? I mean, you mentioned sort of infrastructure, and are you looking at perhaps utilities as well as part of that?
We are. So I think it's both on the public and the private side. But again, I think suppliers of power, I think you're going to see this administration continue to try to be more aggressive around build out of nuclear. And so I think that also bears watching to see what impacts that's going to have short term and longer term.
Okay. Erik Hirsch, thank you so much for joining us on the program today. Really useful analysis and insights. Erik Hirsch from Hamilton Lane joining us there.